Today, I will be doing a part 2 review of the AI Quant multi-system bot. This video is sponsored by Prosperity Algo and our free Golden Time Bomb Expert Advisor. Do you want to make 100+% annual returns through automating the London breakout and the opening range breakout? Then click the link in the description. So I did my initial review of this bot a couple of weeks ago, and I was quite impressed by what I saw. It seemed to be following a real system and trading a whole variety of pairs using more of a price action style breakout, which tends to be quite robust. So some of our viewers here were asking if I could make a part 2 review just to be able to see how it's performed since then. So what I did is I actually went and downloaded the bot, or the updated version of the bot, and I ran a backtest over the past couple of weeks. So we can now go through the live signal page and contrast it with what I'm seeing in the backtest, just to see if everything is looking good, if the risk rewards are holding constant, and essentially what's going on here, and discuss some pros and cons. So this is the bot which we are speaking about today. I won't go over all the nitty-gritties of the sales page once again, just because we've already covered that in quite a bit of detail. I will focus more on how the live performance has actually been. And also because I'm well aware of some of the styles of trades as well as the market conditions of the past few weeks, I might be able to opine on what exactly this bot has been doing and how its performance has been. If we start off here quickly on the equity curve, we can see that the past couple of weeks have been very good for this bot. So it had a pretty nice jump where it made close to 8% in just a few weeks. So it's been having a pretty good week, or a pretty good couple of weeks. And we can kind of go through the sales page, or not the sales page, the signal page here, and see that my review is published on the 4th of February. So we can effectively focus on all of these trades which have happened up until the top. And there's a few big outliers here which are happening primarily in indices. So really some of the biggest price movements in the past few weeks have been occurring in the DAX. So the DAX hit all-time highs in last week, and then it proceeded to have an enormous sell-off more on Thursday and Friday. And here we can see is that some of his biggest trades are indeed taking advantage of that massive sell-off on the DAX. We can keep scrolling a bit further down and look at a few other major trades here too. And we can see that the sell-off, and for instance in the S&P 500, which happened on Friday post flash manufacturing information, has also been exceptionally beneficial for him. Oh, sorry, these did not actually happen on Friday, but still a general sell-off in the DAX. Let me scroll down here too. We can see that the other big sell-off here was in the yen. And then the rest tended to be a little bit more smaller losses relative to some of the big winners. So this style of system indeed is very much a let your profits run system. So it enables it to have some pretty good risk reward trades. And despite the fact that he is being whipsawed quite frequently, there are quite a few little losses here. His big wins are really helping him with the overall profitability. Let's go back over to the statistics page. We can confirm that once again the average profit is greater than the average loss, and we're seeing a slightly better than a 1-to-1 risk reward with a slightly better than a 50% win rate. And yeah, average trades are around 51%. So it is a good trading system. My one concern here, and what we can see as well looking at the actual equity curve, is because he's trading so many pairs, many of which are correlated, we're going to have some pretty nasty drawdowns. And from here we can see we are at 39%, and then we lost quite a significant amount of equity going down to 23% here. So that would be a 16% drawdown roughly. So because he's trading so many pairs, yes, we are seeing diversification, but something which could be interesting is to learn a bit more about how he's dealing with the fact that you can have correlation between the pairs, and this can cause some pretty hefty drawdowns. Because if we look at the actual trading history too, we can see that a lot of these assets are pretty heavily correlated. He's trading the US 30, the US Tech, and the US 500. All of those, they're all US equity indices. They don't move perfectly together, but there is a decent amount of correlation. Moreover, the DAX also does quite often correlate with the S&P 500. I think there's roughly a 70% correlation between the two. So something else to keep in mind. But the fact that he's adding additional pairs in here, like Ethereum, for instance, or even oil, does help to kind of smooth out the general equity curve. And if we now hop over to MT5, I've taken the liberty of running a back test. I can show you guys the report here. And just I wanted to be able to contrast what we're seeing in the live signal with the back test. Because he's trading so much, I highly doubt that we're going to see a perfect match. However, as long as we're seeing like the overall types of trades and assets being traded being comparable, that's probably a pretty good sign. So here we can see that in order to run a backtest, if you guys want to run your own backtests, you need to make sure that the symbols here match those of your broker. So I went through and added a bunch of .i's to match 8cap's raw accounts. I also kind of modified some of the indices to match the symbols used by 8cap as opposed to Exness. And then here as well, I ran a backtest and we're seeing that it is positive. Perhaps there were a few like errors just because the equity and the balance are quite detached. But if we then go into the backtest here and we look at the actual deals, we can see that many of the trades are indeed matching. Some of the big ones are happening on the DAX. We're seeing some happening on the NASDAQ, which are matching his signals. And then we're seeing a lot of little whipsaws here on US 30, US equity indices, quite a few small ones here, whereas the big ones, once again, are happening more so on the DAX and some of the bigger winners here on the USD yen. So what I would probably do if I were to buy this bot is to go through the pairs and reconcile like almost line by line in depth between the backtest and between the signal here. When I run my own bots and I look to take them from something which is like more of a demo account to a live account, I typically reconcile with a backtest just to see if I can trust my backtests, and I look for 90+% match between the live trades on demo and the backtest, just to make sure that going forward I know how the backtest is going to work. But because he's just taking so many trades here on so many pairs, you might have to kind of adjust that threshold downwards and look for a 70% or a 60% match just to be able to ascertain if it's a good signal, simply because like you still need to do some form of reconciliation. But from what I can see kind of with this more high level sniff test, there is a pretty good match between the pairs on the back test and on the live one, just because from a very quick skim going through the different pairs where I'm seeing the big trades happening, as well as looking to see like where are the smaller trades happening and just almost cherry picking some of the big ones. Like here we can see on the 4th of February we have a big win in the yen. Let's go over here, check the 4th of February to see are we seeing that big win on the yen, and we are not. I guess I need to run it a bit further. But then for instance we can check, let's see on the 14th here, we're seeing a big win on the DAX. We can now go back here and see, are we having a big win on the DAX? It's happening, nope. We have one on the 12th, so not on the 14th. So order of magnitude, we are having quite a few good matches, but it's by no means perfect, as you guys can see. Let's check the 19th for one more test here. And not seeing those there. We're seeing those happening on the 21st. And this was the big sell-off in the DAX, which I was kind of thinking of. So, interesting. This is more in the S&P in that case. Whereas here, I guess we are seeing the US tech on the 21st being a big win, matching here. So definitely some degree of matching, at least the profits generated by each pair kind of from like high level sniff test do seem to at least be somewhat matching, but the match is not perfect by any means. So my takeaway and kind of my update is that we are seeing that the bot does appear to be continuing well in more like forward testing. So it does still appear to be a real signal in my opinion, but the biggest downside, and a real bot in my opinion, but the biggest downside with this style of system is simply that it's trading so often, it's trading so much, it's tough to reconcile it. And the other downside is that people underestimate the correlation of certain pairs and certain indices together. So let's say you're running a breakout system on the NASDAQ and the S&P, the DAX, and the Nikkei. If they all happen to have a drawdown simultaneously, that's going to be a pretty nasty hit to your portfolio. So you have to be really careful when running these sorts of correlated and or duplicate pairs, as that can be really, really painful if not taken into account properly. So generally speaking, there's something here. It's performing well, it's performing as expected, but there's still a few kind of issues in terms of reconciliation as well as like correlation between pairs, which I would be mindful of, especially as it's a more premium bot. Guys, hope you enjoyed the review part 2, and let me know if you'd like to see something else.